Greetings, my name is Kevin Matthews and I am the tax professor. Class is still in session, so the learning never stops. And today, I'm going to be honest with you. This topic is, there's certain times that I'm asked to give tax advice on things where I'm kind of like, you know what, I'm going to give you the tax advice that's in your best interest because you're my client, and I'm going to do what's in your best interest. This is something that I really, really wish was different. And I'm not necessarily saying that what Congress did was wrong. I'm not saying that what the IRS is trying to do is wrong. I'm not even saying that what we as, what employers are trying to do is wrong. There is a complicated issue that takes place with employees who work and receive a substantial amount of their income from tips. Okay, full disclosure, I was a bartender and I worked in the restaurant industry for almost 10 years. Okay, I get it. I remember working at a bar where I was making $2.12 an hour, and I was getting, tips, and on, I remember it was a cowboy bar. I remember they told me, this is back when I was much thinner, probably a little bit better looking, and I remember that, I'd go home with about $150 a night in tips, which, when you take the fact that I was working, roughly about 8 hours in a day, that's well over $12-15 an hour. $12 $15 an hour if you add in the wages and then some of the other compensatory things that I received. That's a lot of money. Okay, now the biggest problem that they've always had, that the IRS has always had, how are tips paid? Tips are generally, okay, your drink's going to cost you $2, sir. They hand you a $5. And then you give them their $3 back in change. They drop $1 on the counter, and then they walk away. Okay, that's typically how it happens. It's cash. How do you track cash? You don't. Okay, tracking cash is very difficult. So the IRS has come up with these various ways in order to be able to track this, in order to say, hey, look, Kevin, we know that you did X number of dollars in bar sales, that your bar did. Historically, your bar, based on all the numbers that we're taking a look at here, you should have received X number of dollars in tips. We took a look at what you reported, and it's not there. So we want to make sure that you're not trying to hide things from us. Now, between you, me, and the fly on the wall, and the NSA guy who's being forced to watch these videos, God bless him or her, here's the thing. That is probably one of the hardest jobs the IRS had. Okay, obviously, and again, I'm kind of betraying my craft here, but tips are income, folks. I mean, I'm sorry. As an accountant, I get it, I see it, and I understand why. Tips are income. You should be paying taxes on your tips. Okay, and I'll be honest with you. This is always something that we've always kind of tried to deal with in our things, and how to report those tips and how to get that done. It's very easy to do. When I did it, report the tips. It wasn't a big deal. Then there were several times where you're working in a group, and some people are basically like, okay, this is how much you're going to report in tips, and I'm kind of like, this doesn't add up. Well, if I don't report, and and especially you work union, don't go against the crowd, folks. So there's a lot of gray area that happens with this, and I'm going to be honest. I mean, I don't think I'm going to say anything shocking. There's a lot of times where people are not reporting what they're making. Okay. So the IRS struggles with this a lot. Now, obviously, with the advent of credit cards, when I was doing bartending, credit cards, I mean, very few people would bring credit cards to the bar when I first started out. Most of the stuff was done by cash or whatever. And some people use credit cards, but it wasn't as pervasive as it is today. Debit cards were just like a brand new thing when I first started bartending, so most people didn't even do things by debit card. Credit cards actually make it easy, because when you report it, it gets put in electronically. There's a record there, so that's actually really helped out with some of that stuff. One of the ways the IRS came up with is they said, hey, look, we're going to hook you up here. If you get your employees to report the correct amount of tips, we're going to give you a couple benefits here. Number one, we're going to drop minimum wage down to 1/2 of what it is. And like I said, it was, minimum wage, at the time that we're talking about right now, and I'm sorry, I actually had to look the number up only because here in Virginia, we've got a different minimum wage. And I'm sure, and there's a lot of states that actually have their own minimum wage. Right now in Maryland, they're fighting, fight for 15 is the big cry, trying to get people to be paid a minimum wage of $15 an hour. And so it's interesting because what the IRS basically has is that they go with the federal minimum wage and they say, look, we're going to let you pay your people below that minimum wage, but only if they report enough tip income that equals what they're going to be reporting, to get them back up to minimum wage. And if they don't, you've got to pay the difference. So needless to say, if I'm making, say I'm making, whatever the minimum is for the people who are working in tipped industries now. When I worked, it was like $2.12 an hour, and I don't know what it is now because I've been out of the industry for a while. But, if I didn't report enough tips to get me back up to $4.25, guess what? The employer had to kick in the rest. So guess what their incentive is? Now their incentive is to come back to me and say, Kevin, report your tips. And you got to report accurately, okay? And they want me to do it. Up until that point, the employer didn't care because, it's regardless, it didn't matter. They also have this thing where they do this employer credit for the employee cash tips that gets reported. So the credit relates to Social Security tax you pay on employee cash income, which is treated for tax purposes as paid by the employee, paid to you paid by you to the employee. The credit applies with respect to the tips in connection with the provision of food, beverages, regardless of whether food or beverages are consumed on or off premises. Okay. So the credit applies to the tip income in excess of what is needed to bring wages up to $5.15 an hour. So the IRS has this plan already that says we're going to encourage you to report up to the $5.15 because if you don't, you're going to have to make up for it. But then they do something that goes even beyond it. Okay. In 2007, legislation that was tied to the increase in the minimum wage, Congress, in effect, froze the FICA tax credit based on the pre-2007 law, so it won't be affected for any subsequent minimum wage increase. In other words, to the extent that tax income brings the employee up to the minimum wage, no credit is available. Calculations are made on a monthly basis. A very good example of this. It says a waiter is employed at the ABC restaurant. He or she is paid $2 an hour plus tips during the month. And again, guys, these aren't minimums. This is just to keep the math easy, okay? Don't argue with me here about what the minimums are. During the month, he or she works under 60 hours for $320 and receives $2,000 in cash tips, which he or she reports to her employer. The waiter's $2 an hour is below the $5.15 by $3.15 an hour. Thus, for the 160 hours worked, their rate, she's below by 504, which is 160 times 315. For the waiter, therefore, the first $504 of tips income just brings them up to the minimum rate. The rest of the income is $1,469, which is $2,000 minus 504. The waiter's employer pays Social Security tax rate of 6.5% on him or her. The employer's credit for the month is thus $114.44, which is $1,496. The 2,000 minus 504 times 7.65%. Okay, so it's just on the social, it's a social. Well, that's the Social Security and the Medicare rate. So what it does is that it really encourages employers to get on their employees and say, hey, look, report this stuff. Okay. Let's be honest, I don't think reporting gets done as much as it probably ought to be. And what are they going to have to do with it? I think the only way this is ever going to get solved is to go to a cashless society, which I am not in favor of, but believe me, for a whole host of reasons. But this is just something that we as society are going to be tangling with. I just want to let you guys know, especially those who are restaurant owners. I do have one client that is a restaurant owner, and so they do ask me this question every now and then. Hey, what is it we can do with this stuff? And so actually, this That's one reason why I looked this up for them, and all that. So again, this is a very painful video for me to make because I'm kind of like, hey, look, I was a restaurant worker. I know what it's like. It's tough. But again, my name is Kevin Matthews. I am the tax professor. Class is still in session because the learning never stops. If you have any questions about this, go ahead and put it in the comment box below. Please don't turn this into a Twitter drudge site, though. Please, folks. I don't want to talk about the politics of things here. I want to talk about how tax law works and how it helps the employees, or how it helps the employers, okay? But if you want to reach out to me and you want to talk to me about this, feel free to contact me at my website, www.betasolutioncpa.com. Again, that's www.betasolutioncpa.com. And then you can also, like I said, if when you reach out to me, you can talk to me about any of this. If you like this video, go ahead and hit like. If you like the video series, go ahead and hit subscribe. And if you have any questions, please feel free to reach out to me. Thank you very much for watching.